Hello, everybody. So today I want to talk about some stocks that I'm going to be looking to buy next week and throughout the month of November. These are stocks that I find to be inexpensive right now. And the first one of these stocks is HIMS. So HIMS is reporting earnings Monday evening. So I'm kind of trying to be focusing on my buys on this coming Monday before market close, because in my view, I think it's very likely that HIMS is going to do very well. Of course, you never know how the market reacts. Sometimes these stocks can post great earnings and the stock goes down, or sometimes a stock can post awful earnings, like Solar Edge, if you followed, and the stock was barely down anything. So really, there's no saying where it's going. But in my view, the underlying numbers for the business are going to keep doing great. This is a business that has given us a 2025 guidance of $1.2 billion in revenue. I believe they will reach that at least 6 months early based on where they are right now. So right now, for full year 2023, they've told us $830 million. They will actually, in my view, handsomely beat that for the full year of 2023, because if you go back to HIMS, I've been following HIMS for a while, every single time they give us the earnings, they update the guidance up. So we have Q3 on Monday. Will they update it up? And then we'll have Q4. Will they actually realize something more than $830 million when they post their final number? This is a business that has been surprising to the upside over and over and over again. Current enterprise value over sales is 1.66. I don't understand how cheap this stock is. It's hard to understand. It's the cheapest stock in my spreadsheet, my usual Friday spreadsheet that I cover on the channel. Analysts are predicting 57% growth going forward. That's actually accelerating growth. And when I calculated out myself based on the guidance, I know we're going to have to change the guidance, or we're going to have to say we're going to grow only 20% because we're growing way too fast and we're going to blast through that guidance very easily. In my view, gross margins are 80%. Most of the products, 90+% of the revenue of HIMS is recurring revenue. They're subscriptions, recurring subscriptions. And they sell a product that is mostly recession resistant, right? Are you going to stop paying 40 or 50 bucks a month to save on things like ED treatment, or to save on things like hair loss? Are you going to stop spending that even if there's a recession? I don't think so. And what's great about stocks, of course, that have their business be mostly an app, right? Selling mostly for an app, as you can see how well they're doing. And depending on the day, I've seen HIMS as high as number 6 here. Like right now at the time of shooting, they're number 10 on the App Store. This is the number 10 health app on the App Store. So right in front of Teladoc. And Teladoc is supposed to be this company that has more than 100 million people that have access to the app. Well, HIMS is ahead. HIMS is ahead of them as far as download. So I love HIMS very much. This stock, as everything that I look for in a stock, I very, very strong growth and a great price. Let me move on to another stock that I've been buying heavily. It's almost unreasonable how much I've been buying of that stock. I'm now at 40% of the portfolio, but I keep buying as long as we have this stock this cheap. I keep buying it, and it is Tesla. Tesla at $220 in my view is very cheap. I think this should easily be a $300 plus stock right now. I do not understand how this stock is this cheap, besides the market being so short term and Elon Musk putting a little bit of negativity out in the call. That's the only reason what I see. And then you see, if you saw the Joe Rogan interview, very little about Tesla in that interview. I looked at it. It's not much about Tesla, but if you look at it, the Cybertruck, he's already upped the guidance of the Cybertruck in that interview by quite a bit. I believe, I can't remember. I believe it was more than 100,000 that he expected next. Anyways, over the next few months, he updated that guidance up by quite a bit. I'm sorry, I'm a little tired today. But he updated that guidance up by quite a bit. And the market should react very positively on Monday to that, and we'll see. But the Cybertruck, compared to the guidance that they given in the call, Elon Musk has already upped it. So we'll see how much of a Cybertruck will sell. Of course, Tesla is a holistic story. There's much more than the Cybertruck to the Tesla story. Tesla is a top performer over the past 13 years, top performer, almost 45% average annual growth over the long run. So excellent performer. And I've outlined my recent bull case, bull case for Tesla. I made that video when the stock hit $197, and if you want to know the full detail of my vision for Tesla and why I think this is perhaps the easiest 10x in front of our eyes in the market right now, I would recommend my video that I made on the topic. But of course, there's a lot of coverage on Tesla. Everybody covers Tesla out there, which is why I follow it, but I don't follow it too closely because I am so confident in that company. And I've seen what they've done, and I am well up on my investment, and I expect to continue to be up. SoFi is another one of these stocks that are actually pretty cheap. SoFi had outstanding earnings last week, really, really great. The stock started up, it was up 15-16%, and then because only macro matters to the market, the stock ended up trading in line with what it was trading the previous day, barely moving. Thankfully, on Friday, we've had a great day for stocks, and the market came back to its senses, and the stock is now trading at around $8. I believe this is very, very cheap for a stock whose growth, I want to point out, is accelerating. If you've seen my video that I made on SoFi on their earnings, I'm not going to focus on the financials because SoFi, again, heavily covered stock on YouTube, on the internet, on Twitter. So I don't want to dig into all of the details. My style of investing is product adoption. I love SoFi. Why? Because SoFi is getting adopted. I am seeing very strong adoption in the numbers, and the numbers follow the product adoption curve, the S-curve. When I see SoFi, they were growing quarter over quarter their members by 10.3% quarter over quarter between Q1 and Q2, between Q2 and Q3 that they just reported. We've seen that growth rate accelerate. It's now plus 11.5% from this quarter to that quarter. So we saw more than 1% of acceleration in the growth rate. So it's not decelerating, it's accelerating. So this is a company that now has 7 million members, right? 7 million members, keeping in mind that they want to be a top 10 financial institution by 2030. That's their goal. In my view, they're going to do it, because if you look at Bank of America or JP Morgan, right, the biggest banks in America, each of them have about 50 million digital banking clients, right? Little SoFi that most traditional folks don't care about and barely know anything about and still associate with a student loan. Little SoFi has 7 million, right? Growing at roughly 50% year over year. And it's got 7 million. So ask yourself, how many years at 50% do you need to get to that level? A few years, but it's well doable within a 6-year period with that type of growth. Plus, they're going to be GAAP profitable in Q4. Now, my fear when a stock becomes GAAP profitable is that it shoots up. And then I find it overvalued and I don't want to add to it anymore. So right now, SoFi is ignored because it's not GAAP profitable. And it's still seen as this overvalued company. But beware, when GAAP profitability shows up, this is a stock that could re-rate to the upside, and thus, I might be less interested at the prices of the future. I think this is a stock that's cheap right now. I do not understand how this stock is trading still this cheaply while the CEO keeps executing. It's a stock that's getting shorted. By the way, if you look at product adoption, not just the members, but if you look at actually the products that they sell, it's very, very, very clear that there is no deceleration in the growth of this company. You see year-over-year number for lending products. You can see 24%, 25%, 24%. So roughly 25 to 24% over the past 7 quarters in lending products. And then look at this. The financial services products, right? 51%, 47%, 50% this quarter. So roughly in the 50% range. There is no sign of deceleration for this company. I am very pleased, and actually very hopeful that even the student loans, as the student loans slowly come back, we may see that line of business still come back. And many of my fears on student loans do not seem to have manifested themselves for SoFi. And that was my fears of the market associating them with student loans. So we'll see how this goes. But this is a stock that's doing very well. Oh, last thing I didn't put here, there are Amazon Web Services, AWS of FinTech is also resuming its growth. It's the second quarter where Galileo is growing for SoFi. SoFi is a product adoption story. I love my SoFi stock and I want to add more to it this coming week and throughout the month of November. Another stock that I love, which actually popped on Friday. That stock went up quite a bit on Friday, and that stock is StoneCo. So you may have seen my video a few days ago comparing StoneCo to PayPal, and obviously I can't understand why anybody would buy PayPal when StoneCo, for example, is much cheaper than PayPal. And it is, of course, as far as enterprise value or EV over EBITDA, it's attractive to the point that any value investor, in my view, would be very interested in StoneCo, and it's a stock that's accelerating, whose growth is accelerating at 39%. Right, and they have all of these opportunities at the point of sale in Brazil, and I think that's the leading stock in the category. And I have never seen a stock as cheap as StoneCo, except for maybe HIMS and StoneCo. I find them the cheapest growth stocks out there. Very happy to own StoneCo. I've covered StoneCo multiple times on the channel, but the stock is still trading between $10 and $11, and it has stabilized. It's been forgotten by the market. The market has forgotten about it. It's in the corner of the market somewhere. Nobody's looking at it. And that's a good time to accumulate, because I don't think if this stock trades at its fair value, which would probably be, $40 to $50 if it were more in line with other fintechs, I would be less interested. But this stock at this price right now is very cheap. I've covered it multiple times on the channel. They also report in the coming days, and I will be covering that stock. Now, a stock whose buys have been increasing, but I'm basing myself on Enphase because I think Enphase will remain cheap until Q4. So I pace myself my buys, but the stock that I've been adding to is Enphase. I'm back fully on Enphase. I briefly bought a little bit of Solar Edge after I saw how Solar Edge is handling the recession in solar. I much prefer Enphase, and I'm going back to the winner, going back to the number one in the space, which is Enphase. All of the bad numbers that we've seen about Enphase, about the drop in demand, those numbers were between 50 and 70% worse at SolarEdge, which tells me that Enphase actually, even the revenue is down for Enphase. The gross margin on the product was up. It exceeded the guidance. It was 49% gross margin versus 46%. So they've increased their gross margin. So they're managing the downturn, retrenching in the downturn, and making their business leaner. And I do believe that downturn for solar installs is temporary. Right? Every year we wait, every year we see solar panels getting 15% more efficient and electric prices getting 15% more expensive. So you add both 15, you have a 30% delta in the economics offered by solar a year from now compared to today. So a year from now, with the efficiency improvement in solar panels and with an increase in electric rates, solar becomes 30% more compelling from an economic standpoint. And solar, of course, it's seeing a slowdown because of interest rates, but I'm consistent with myself on this channel. I believe that interest rates will drop in 2024 and will go down in 2024, and the market is likely to anticipate this as bullish for a stock like Enphase, who sells installs where you typically need to finance $25,000 to $35,000. The sale of a solar system on one's house is a similar value proposition to selling a car, provided that the car you need to go to work is perhaps a tougher sell in this environment. But buyers are not single issue buyers, right? They don't buy products based just on interest rates. They buy products based on a whole array of reasons. And in my view, solar right now, the payback is between 6 and 9 years, depending on where you live. Wait a few years when the payback is 3.5 to 4 years, and people will go back to solar, will flock again back to solar, and will we may even see shortages in the solar world, just like we saw in 2020, because the demand, in my view, is going to be that large. Once you've installed solar, it is free electricity and it is free transportation. And think about how easy it is of a sell, right? This is not a nice to have. This is not just something that you do for the environment or for virtue signaling. No, this is something you do because it creates tremendous opportunities and savings for your home, for your household. Just want to say a few points about Enphase. So imagine even demand is flat. Let's keep in mind that both for Enphase, this is true for SolarEdge too, but focusing on Enphase, this drop in demand is due to the fact that the distributors have too much stock. They've shipped too much to those distributors. That's too much stock. So they have to reduce shipments, and they recognize revenue at shipments, and they have to reduce shipments much more than usual. Shipments, i.e. the revenue for Enphase, right? These revenues do not indicate the popularity of solar, right? What indicates the popularity of solar is the sell-through at the inventory and actually how quickly solar is getting installed. But Enphase only sees those numbers through revenue later on, but it sees the size of the demand live when it sees those installs being connected to the cloud, because each solar install is connected to the Enphase cloud. So they can track whenever installers commission a system, they can track. And based on tracking that demand, they estimate that the current demand for Enphase right now is about $475 million in revenue per quarter. Keep in mind, this is a stock whose gross margin is gonna trend towards 60% thanks to the IRA. So you do 60% of 475 million, 1.9 billion out of the year. You do 60% of that. That's gonna be your gross margin for a stock right now which is trading under a $10 billion valuation at $80 per share. And there is a buyback. So if you do the price you sell is a 5.2 for a stock that is the top 10. This stock has been the top 10, one of the top 10 best performers in the S&P 500, and it's trading at 5 times sell. So it's much cheaper than a Tesla. It's much cheaper than a lot of companies out there for similar growth, right? That growth is tremendous for Enphase. So I'm very bullish on the stock. I think this stock over the long run will do very well. And the last stock that I want to cover today, I'm a little tired today, maybe you can tell, but the last stock that I want to cover today, for a stock that I'll be buying next week, and not just next week, next month, before Bitcoin runs up, right? Bitcoin may run up. You may know that Bitcoin is my second biggest position, and it's my bond alternative. And I call it, my second biggest stock is Enphase, but my second biggest position is Bitcoin. But Bitcoin is not a stock, right? It is an asset that you store in a brain wallet. You store it in your mind. That's where you store your Bitcoin. You don't hold it at a brokerage, right? But I do own Bitcoin in the form of Microstrategy as well through my brokerage, mostly because it's easy and you can also have a margin of safety if you use a margin trading, any type of margin trading. I think it's very important to be able to have some of that Bitcoin in a form that is held at the broker, to use a little bit of that collateral. So that's the main reason why I own quite a bit of Microstrategy, but I consider this to be one of my Bitcoin holdings. Why do I want to own Microstrategy and or Bitcoin right now? Because in April, let's not forget, this is the moment to prepare. In April, the supply gets halved, which means that if there is any logic, and if the demand for Bitcoin, if the daily demand for Bitcoin stays the same in April, but we cut the supply of new Bitcoins by half, keeping in mind that most of the Bitcoins that are sold on exchanges today are Bitcoins that are mined, that come from miners. So if you cut it by half, what does that mean? That means the price should theoretically double. Theoretically. So theoretically, are we going to have a Bitcoin, in the 80, 70, 80-ish range sometime come May or June 2024? If there is any logic to it, normally yes, because the supply gets halved, right? Imagine one of your stocks gets its float halved, cut in half, right? That would probably have a great impact on the stock, and that's why Bitcoin. I'm very bullish on Bitcoin right now. But there's other bullish catalysts on Bitcoin. The ETF. The ETF is a major catalyst, and BlackRock may launch its ETF in Q1 of 2023, perhaps as early as 2024, sorry, not 23, perhaps as early as January. That should create a lot of demand for the stock. And lastly, a more long-term change for the stock is, of course, the change in GAAP accounting and the fact that now Bitcoin will be treated on the book for its value, and it will not be able to just be marked down, right? Companies will be able to use fair accounting, fair price accounting when they treat Bitcoin. And because of that, I think that's greatly going to benefit MicroStrategy. There will be a day where MicroStrategy posts ridiculous earnings because of this change in accounting metrics. And because of that change in accounting metric, that's coming late 24, probably 2025. When that's coming, that means a lot of companies will be able to adopt Bitcoin without complexifying too much their income statement every quarter, and that should lead very long-term adoption. Quickly about MicroStrategy, and I'm not going to do a separate video to cover MicroStrategy's earnings. I'm actually off to listen to the full call of MicroStrategy. One of the things that I find very positive about MicroStrategy is that they seem to be a little bit of an AI play, and I've done a little bit of study as to what the role of Bitcoin in an AI and how these two topics fit together. And it seems like MicroStrategy is pushing a lot of that software. Let's not forget MicroStrategy is of course today mostly known as a holder of Bitcoin, but they're actually also a business intelligence software company. They're a software company, and they seem to be implementing quite a bit of AI in their new offerings and in their new subscription, and they seem to be getting into LLMs. So this is just something to keep in mind. Hopefully this doesn't happen too much because I'm still accumulating the stock. But you may get into a situation where we get back into a bull market where you have a stock that is both AI and Bitcoin all in one stock, and then you could get into a situation where a stock gets overvalued. I'm not hoping that. This is a long-term hold. And my video software just stopped recording because I ran out of space on the computer. So that's all I had to say about MicroStrategy. Well, I was pretty much done. Thank you so much for watching this video about all the stocks that I intend to accumulate across the month of November. This was not investment advice at all. This is just entertainment. Thanks for watching my channel. Appreciate your likes, appreciate your subscribes. Have a wonderful day.